Okay, so we've done up to the income statement, and what we're going to do now is move on to the balance sheet. So this is the second last stage of the question. So I've got my exercise spreadsheet on this side, and on the other side I've got I want to click on my balance sheet spreadsheet. So once again, we start with the business name. So let's bring that across from the exercise. Use a formula wherever possible so that you're basically having to type less. Identify the name of the statement, and in this case it's the balance sheet. And the date line then is as at 30 June 2010. And I'll just make this a little bit bigger because I'm sure that looks pretty small. Okay, now again, just like the income statement has a very defined structure, so does the balance sheet. Always starts with our assets. So again, I want a smaller column at the beginning here, and I'm going to put my asset heading in B column. So put my heading in assets, and then we bring the assets in with a formula. My first asset is the cash at bank account. Not sure why it keeps doing that, so sorry about that. So bring the amount in, and we've got a few assets, so go down further than you think you need to, and my last asset is accrued revenues. So just get rid of everything else. So here's the business's assets. Now, before I go any further, remember these assets need to be listed in a particular order. Who remembers what that order is? Order of liquidity, which basically means that the most liquid asset goes at the top, down through to the least liquid asset. And if you're at home doing your work in an exercise, refer to the inside cover of your textbook because all the assets are listed in there in order of liquidity. So as I scan down here, cash at bank is the most liquid asset. But assets that are more liquid than cash at bank would be cash in hand, then petty cash. Those two would go before cash at bank. Accounts receivable are next, then inventories. Land and buildings are okay, but vehicles would be more liquid than land. So I'm just going to insert a row above land and move my vehicles and the amount for vehicles above there. Now, these are okay. Prepaid expenses and accrued revenues would go after inventory. So I want to insert 2 rows after inventories to move my balance day adjustment related accounts to that position there. So that now is in an acceptable order of liquidity. If you get land and buildings around the other way, that's okay. Motor vehicles and equipment, back to front, that's fine. But if you've got cash at bank down here, you are going to not be credited with that particular, with being able to order assets in any type of liquidity. Okay, on this, I'm going to underline the last asset, and on the side there next to the final asset, I am going to put the subtotal for all my assets, 102,600. Now, the balance sheet is basically a representation of the accounting equation, and in this case, it's A take L equals owner's equity. So leave a line blank and key in less, and we're going to head up liabilities. And then it's simply just a formula to bring in all my liabilities. Accounts payable is the first one, and again there's a few of them. So I'm going to bring the amount in first, and then bring in the others and get rid of any that aren't a liability. I'm just going to make B column a little bit bigger so I can reveal the full account. If you don't, boys, when you're printing, if you can't see it here, you're looking at the screen, if you can't see it here, you won't, that's exactly how it will print. So you shouldn't print like that. Make sure you reveal it all. Underline, oh no, don't want to underline yet because we need to put these in a particular order as well. And the order that these go into are the order in which they are repaid, from the first to be repaid through to the liability which takes the longest to repay. And clearly mortgage will take the longest. So all I need do here really is just pick up my mortgage and place it underneath my balance day adjustment related accounts, delete that row, and that's now in the correct order. Accounts payable, then GST, accrued expenses, unearned revenue. Again, if you get them round the other way, that's fine. A loan would be, it would be before mortgage, and mortgage would generally always be last. What would appear above accounts payable if you had this account? It would be bank overdraft. Underline your last liability. Put across the subtotal. Underline the subtotal for liabilities, and over in the far column here, the next column, we're going to record, oh, sorry, I'm not going to put it there, my apologies. Underneath it, I'm going to record assets minus liabilities, and that's called net assets. Well done. And I'm going to double underline that because this is called a balance sheet, remember? And the reason why it balances is because A take L, in this case 82,750, should equal my owner's equity. So let's hope it does. Okay, leave a row blank and key in represented by, because that's going to be represented by my owner's equity. And this is always set out in the same way. It's going to equal capital, bring in the amount, bring in drawings, and now above drawings, I want to add my net profit. And I need to go to my income statement to get my net profit. Bring in the net profit amount. I think I have to go across a few columns to bring in my net profit amount. So I'm just going to delete that. 0. Underline my, oops, didn't mean to do that. Underline my net profit. I want to drop my drawings down another row so I can add these two together. So what capital do I have now? Now this business has $83,750 worth of equity, but I need to take away my drawings because the owner's taken drawings during the period. Underline drawings, and over to the side here, hopefully when I take my drawings away from my equity, it's going to equal my net assets, and yes it does. So I now know that my balance sheet has balanced because these two are the same. Assets minus liabilities equals owner's equity. Any questions about the balance sheet? Okay. Let's do the ratios then. Click in the ratios spreadsheet. Are we ready? Should I wait a little bit? Daniel, have you finished?
Yeah.
Okay, let's hop into ratios then. Now, the three ratios you must be able to calculate in the exam are the gross profit ratio, net profit ratio, and return on equity. They're the profitability ratios. They help you determine how profitable the business is. So we need to know the formulas. The formula for the gross profit ratio is gross profit over net sales. So I'm just going to underline gross profit so we know it's divided by net sales. The formula for net profit is net profit over net sales. The return on equity is net profit over average owner's equity. And then it's just a case of pulling these figures out and moving them into this spreadsheet here. So I'm going to click in my income statement here. So gross profit equals $30,250. Net sales equals $49,000. Net profit equals $29,325. Net sales I can just get from above, but just make sure if you do that you've got the right figure to start with, otherwise you've made two mistakes there. Net profit equals $29,325. Now my average owner's equity is going to equal, and I need to open my brackets. And I need my balance sheet for this one, so I'll need to cross to my balance sheet over here. Average owner's equity equals equity at the beginning, and equity at the beginning for this business is $54,425. That's how much capital we started at the beginning of the period, plus the equity we finish with on the period, which is $82,750, close brackets and divided by 2. So that's what I get for my average equity. Bring your figures across and see if you agree. Any questions? All right, so let's calculate the ratios. It's basically just going to be for the gross profit divided by net sales. Net profit ratio equals net profit divided by net sales. And the return on equity is going to equal net profit divided by average owner's equity. I want to convert them to a percentage. So highlight them, click on percent, and they're the percentage results for the profitability ratios for this business. How you going, John? Okay. Any questions about calculating those? Yes, Luke?
I know how to get the average OE and net sales from.
Oh, net sales. Yeah. Net sales is sales less returns. So we're going to go to our income statement. There's my sales, 50,000, minus my sales returns is 49,000. That figure there is net sales.
Okay. What about the average owner's equity?
Average owner's equity is equity at the beginning of the period, which is 54,425. That's the figure you're given in the exercise. And then equity at the end of the period, which is basically the difference between the two, is the profit you made during the period and any drawings that the owner has made. So average those two figures out, and that's your average equity. Now, if we have a look at this scenario here, this owner, Jay Knight, is thinking about taking on a partner, but the partner will only invest in the business if Knight returns a gross profit result of 51%, a net profit result of 18% and a return on equity of 16%. Do you think that this potential partner is going to invest in Knight's business?
Yes.
Yes. Based on those figures, the partner would be silly not to. But in the exam, that's exactly what you need to do. Compare your results with the scenario, but then you need to write a 1-paragraph, approximately 100-word paragraph to explain your decision. So I'm going to put the decision here. Okay, so let's just do this paragraph. Knight's potential partner requires the business to return a gross profit, net profit, and return on equity ratio result of 51%, 18%, and 16% respectively. For the period ending 30 June 2010, Knight's profitability ratios of 62%, 60%, and 43% respectively more than accommodate these predetermined requirements. The potential partner will invest in Knight's business. So there's basically 3 sections to this response that you've got to provide. And the sections are: identify, first of all, what it is the owner has to achieve. And that's it there. So what does this owner have to achieve? They need to achieve a result of 51%, 18%, and 16% respectively. So that's the first thing you need to do. The second thing, so you're basically just stating what they have to be able to achieve. The second thing you have to be able to do is quote the result the business returns. So for the period ending 30th of June 2010, Knight's profitability ratios are 62, 60, and 43% respectively.
Why do you have to say respectively?
Because that stops me having to say 62% gross profit. So the question was, why do I keep saying respectively? I've quoted the order once here. The gross profit, net profit, and return on equity ratios results of 51, 18, 16% respectively means in respect to the order that I've listed them. That's what they relate to. Yeah, it's just a bit cumbersome to read and cumbersome to type, and this is a little bit more, I suppose, efficient and economical in words. It's up to you. You can if you want. The third thing you need to be able to do is to make the decision. Well, okay, their ratio results are pretty good. So you need to make a decision. Is this scenario likely to go ahead? Is this partner going to invest? And you've got to actually do that sentence. Yes, the partner is going to invest. So what are the requirements? What's the result for the business? What's your decision based on that data? And that, boys, brings the entire prac process for this unit to an end.
Yay.
Just just going to stop this.